Hello viewers and welcome back to Dukascopy TV. Joining me now in the studio to discuss some of your favourite pairs is Jean-François Owczarczak of MJT. Jean-François, thank you very much for coming in again.
Hi Natalie, thanks for having me back.
Okay, so if we take a look at the daily overview that we've got here, I wanted to quiz you firstly just on the Euro US dollar and pound dollar. They both the euro and the pound ended last week on highs against the US dollar. How's that looking coming into this week?
Okay, well the first thing we can see the correlation over the last few months has been quite close between the euro dollar and the cable. We'll look at it early afterwards and wonder if that correlation is probably desyncing a bit. But first of all, I just wanted to go around the whole mosaic here. So we had euro dollar still heading up on the daily, cable still heading up on the daily, Australian dollar still heading down, gold still heading down, 30-year treasuries in the US still heading down, and then the opposite of euro dollar, dollar Swiss still heading down. Dollar yen had a very long consolidation, maybe breaking out, and finally the 3 months S&P future is continuing up. Just wanted to focus on these three first: Australian dollar, gold, and treasuries. Well, basically they're very much in sync this year, and basically it's actually because real rates have been coming up since the month of since earlier in the spring, and so basically this pressure up on real rates is having a negative effect on gold because of the opportunity cost of being in gold, and which incidentally has a negative effect on Australian dollar. And so in this respect, we would expect these three to continue in sync, and we believe they're still in a downtrend. Now, the corrections up on the treasuries and on Australian dollar seem to be finished and seem to be rolling over again. So we would expect more weakness on Australian dollar, on gold, and more weakness on treasuries, meaning that interest rates should resume their uptrend. Now, if we look, focus back on the euro, and maybe we'll look at an hourly mosaic, what we can see, well, it's nice to see the sync here again between these three components here. But if we look at euro dollar, it has been a correcting up, and this correction up is only still a correction up at the moment. And as you can see, it would need to go above the corrective targets to create a stronger move and put the euro back in the uptrend that we've seen on the dailies. Well, it's been having problems doing so over the last few weeks. The trigger point is 136, and we'll have to watch that very closely. Now, if you look at sterling or cable, it has gone through these corrective targets and is a much more stronger move. It's an impulsive move up, so it is resuming its uptrend much more easily than euro dollar. Now, another contradiction that we could see is that dollar yen is breaking out, meaning that the yen is getting weaker, and that the dollar is getting stronger against the yen due to the quantitative easing in Japan. And in that respect, we see the dollar pairs are not very much in sync at the moment. So we'll focus on euro dollar and dollar yen specifically today.
How is it? I mean, it's a pretty quiet US week, really, aside from it being the Thanksgiving week. How is that likely to play out on your dollar pairs?
Well, just maybe less activity, but I think we really have to look at the charts to have a view of it, because Thanksgiving is going to be a lot about the direction, and so let's have a look at euro dollar. Well, basically, we're still in a long-term uptrend on the weeklies. We're still very much in a basis, so I wouldn't want to confirm anything too aggressive here. But the envelopes are heading up, and given the volatility, there could be quite a lot of potential. Now, on the dailies, we're still heading up. We did have a quite significant intermediate top, and I just want to focus on this, where our envelopes did touch each other, and our oscillator was in the overbought zone, so very well synchronized, and hence the recent correction. It does seem that it's not quite over yet, but we really need to see some resume uptrend kicking in here to confirm that the move is not over. And that we're going to be looking on the hourly most specifically, meaning it has been moving up for the last 2 weeks, but it really needs to make it above the 136.20 level here. As long as we stay below that, there may be a chance that the correction that we're seeing may be more significant and last a bit longer. So really check out this 136.19 point, which is our trigger point for the resume uptrend of the euro trend. Now, I wanted to focus on dollar yen. Well, dollar yen, we've been mostly a positive all year. We labeled the top earlier this year as an intermediate top, and we're waiting for this consolidation to finally end and to lead us higher. And as you can see, well, the long-term weekly charts still have some way to go in the direction of 110, and there's still a few quarters. We did have a lot of exaggeration here on the oscillator, but it's not that well coordinated with the envelopes anymore, which basically have refocused in the middle of the long-term range. So we believe this trend is still in place and maybe breaking out again for a new move.
So if you're still aiming for that 110 target, when is it likely to hit, do you think?
Well, let's focus it on it again. Well, you have about 2-3 quarters to come, so we would at best to see it sometime between the first and the second quarter next year. And now if we look at the daily, well, the daily did reach its targets, but you see the oscillators are still quite low here. A typical breakout situation, you always have to be careful because there's a lot of false breakouts, but at the moment it's looking quite well sustained, and so we would expect it to move higher. We're already in the initial targets, but we could probably make it on a daily basis given the volatility up to 105. And the hourlies are moving up quite rapidly. They've reached the objective, so before we go to 105, we might see a bit of correction here over the next week or so. I just wanted to go back and focus on one instrument we haven't talked about and go on to the S&P future. Although we have reached almost all our objectives, if you look on the weekly impulsive up done, on the daily impulsive up done, and on the hourly impulsive up done, we've been quite aggressive in not calling a correction up to now. We believe that the trends are still very well positioned. We're in an expensive territory, but we believe that there's still a potential until next year. Now, the exaggerations that you see here do lead us to think that some sort of consolidation can happen over the next few weeks, but we don't think it is in nature of turning the long-term trend. So still potential continuous uptrend with free bills.
Okay, Jean-François, thank you very much.
Thank you.
Jean-François will be back with us next Monday, but don't go away, we've still got plenty more exclusive interviews for you. Goodbye for now.